Welcome to the Smart Crypto Investing Podcast. I'm your host, Chuck Rivers. I want to thank you so much for tuning in today. Today is Monday, March 5th, 2018. It's been a few weeks since I posted an episode. I think the last episode that I posted was actually the beginning of February 5th was the last episode that I posted. I took a break. You can say I had to recalibrate and kind of figure some things out. And particularly one of those things was the goal that I have for the podcast and sharing certain information, and also, but more importantly, the benefit that I want to give to you as a listener of smart crypto investing. There's a lot of podcasts on cryptocurrency, and some good, some bad, but the goal of this one, if you haven't listened to any of the previous episodes, is that this is going to be more of a philosophical approach to cryptocurrency. Of course, we'll definitely get into some of the technicals, discussing the blockchain technology and cryptocurrency and some of the coins, ICOs. I mean, we're going to cover everything cryptocurrency, but the foundation is going to be based on a philosophical approach to cryptocurrency and why we need to pay attention to this space, and as the subtitle of the podcast is the future of money, because that's what cryptocurrency is. Some of the past episodes, I spoke with the CEO of BitShares, Stan Larimer, also Kiro Ravenstrong, who's also part of the BitShares team. We talked with Darius Norman back on episode 6. That one was not on cryptocurrency. It was talking about fixing credit moving into 2018. That was a end of the year special show that we had done. And so the majority of the shows, again, will be based off of cryptocurrency, but then we may twinkle in some other aspects of finance, because it's as one thing to have a knowledge of cryptocurrency, but it's also a complete another thing is how to manage an investment portfolio. And that comes down to just basic money management. How much money do you have going towards bills? How much money do you have going towards savings? And then how much money you have going towards investments, cryptocurrency, and then your typical traditional stocks, bonds, and some of the other investments out there on the marketplace. But so the title of today's episode is why don't big banks fuck with cryptocurrency? And there's an article in Forbes from March 5th, 2018. Let me see. I'm going to read. I'll read this part, and I'll post this in the show notes so that way you can read the entire article. It's not really long, but it's posted from Forbes.com from March 5th, 2018. And the article goes on to say banks have been against the concept of the cryptocurrency, and only now they're catching up with the concept of the blockchain technology. Remember, Bitcoin brought the blockchain technology on everyone's radar. Banks have used excuses such as higher volatility and money laundering to play down the concept of cryptocurrency, particularly Bitcoin. In the UK, some institutions have already made headlines by not approving mortgages for those customers who have made their capital gain by investing in Bitcoin and other altcoins. For me, and this is the author of the article, the message from banks was that they are using this as a cover by saying that the source of funds can't be verified when in fact they have no clue how to factor into their accounts. What I get from, and not just this article, but from some of the other articles and a lot of the bigger banks saying, well, it's not regulated, and they're talking about this, the type of where this money is coming from going into cryptocurrency. People have to realize money laundering did not start with cryptocurrency. This whole issue of illegal activity was way before cryptocurrency came onto the scene. Right? You had major cartel, big drug dealers who were putting their money into gas stations and hospitals and banks and all that. So I don't understand why this is an approach, or why this reason is the reason why some banks, and I'm going to talk about some of the headlines, because there's always two sides to a coin. So when we hear all this negative, quote unquote, this negative news and this fear about cryptocurrency, you also got to look at what's going on the other side of the coin. And I'm going to cover some of the headlines to say, hey, yes, some of the big banks are against cryptocurrency, but here's what some of the other institutions are doing. And those should be the indicators, not personal feelings of why cryptocurrency is or isn't a bad investment, but more so what's actually physically, tangibly being done. But when we're looking at the investing into cryptocurrency, the first thing is that nobody's investing 100% of their portfolio. Actually, no, let me go back, because I think we were talking about the article per se, and how so Visa. So to give you a foundation of this particular article, Visa stopped their holders from purchasing cryptocurrency. And I know it was for credit cards. I'm not sure about debit cards, but I know it was for credit cards. If you had a credit card, Visa credit card, you couldn't purchase cryptocurrency from one of the exchanges like Coinbase or Bittrex or some of the other exchanges. Well, you actually can't buy directly from Bittrex, at least as of today, or I could be wrong. I'm not sure. Somebody verify that for me and post it in the leave me a comment on the podcast and let me know if what I just said was accurate or not. But long story short, the whole idea that this is a volatile asset, to me, it's a moot point. I mean, anything can be volatile, right? People try to predict the stock market, but you can't predict the stock market. Right? You invest a little bit of money consistently over a period of time, and that's how it works. All right, you're not investing 100% of your income into cryptocurrency. Let's say you make $100,000 a year, and you decide to invest $10,000 into into stock market and cryptocurrency. Then you take a portion of that $10,000 and put it into cryptocurrency. You're not putting the whole $10,000 into cryptocurrency. All right, you have to invest an amount that you're comfortable losing. And if you have a balanced portfolio, more likely than not, you won't lose any money. It may go down some, but because you have a balanced portfolio of coins and altcoins, and on top of the fact that you're investing into the stock market, your typical stocks and bonds, ETFs, then at the end of the day, it's like you're not really losing if your approach is a long-term investment strategy. I mean, there's some people who are in it. They're looking for the hottest ICO. What's the next hottest ICO? And those are the quote unquote day traders for cryptocurrency. I can imagine that's probably highly stressful. You have to be really technical and analytical in order to be successful in that, unless you have some type of system that kind of does all that for you and it tells you, hey, you need to buy this trade right here, sell it in 2 weeks or whatever the case is. All right. So to talk about some of the headlines, so I'm on news.bitcoin.com. Actually, I won't use that one. I'm going to use CoinDesk. I know CoinDesk is a popular site for cryptocurrency. Let me see. Let me read some highlights. So here we go. Liechtenstein, Liechtenstein, opens up cryptocurrency investment for clients. And let me click on the article, find out where this particular bank is. So this particular bank sounds like it could be like a German or UK based bank. Let's see. I'm not even sure what this bank is. Liechtenstein Bank? I could be saying that wrong. Liechtenstein Bank. So they're opening up a cryptocurrency investment for their clients, right? So that's one bank that's going the opposite direction of some of the other banks who are actually stopping people from using their cards to purchase cryptocurrency. Let's see. Let's read another one. The U.S. government wants to keep 5.5 million seized in Bitcoin. I wonder why. Mexican lawmakers pass cryptocurrency regulation bill. UK central bank to clamp down on crypto money laundering. Right. So just if you read some of these, so I'll highlight this one because it's a lot bigger than, and it's more objective than subjective. So banks feel that cryptocurrency, and you got some of the terminology, banks feel that cryptocurrency, banks think. No, let's look at what's actually being done. Mexican lawmakers passed cryptocurrency regulation bill. That's huge, right? They just passed the bill. Well, while everybody was concerned of what the banks feel about cryptocurrency, Mexico passed the bill about cryptocurrency. So that's some of the stuff we have to. And again, I'm not saying take everything, for face value. If you're a listener of this podcast, one of my philosophies is always do your research, whatever information you're told. Even any suggestions on coins that you'll hear on this podcast, I'm going to say and put a disclaimer. Hey, be sure to research and do your own due diligence, because eventually you'll develop your investment philosophy. And I'm working on a ebook right now, and it's going to highlight my own personal investment philosophy. And just the approach that I take, and it may work for you, it may not, right? But that's just that'll be my approach to cryptocurrency. And that's eventually you'll develop your own philosophy, right? Now there's certain principles, that are extremely important in order to have a successful investment portfolio. And we'll cover that as well. So I don't know. I think the way things are shaping up and unfolding right now, especially being that we're still in the going into entering the end of the first quarter of 2018, is that regulation may be a huge deal in 2018. We may see a lot more regulation coming into the space. And once you start seeing regulation move into the space, then we'll start seeing some of these banks change their opinions on cryptocurrency. But the biggest thing right now is because it's not regulated, it's decentralized, that banks have no way of verifying transactions, because they don't want to remove the middleman, because most banks are middlemen, right? The bank's the middleman between somebody's employer and them getting paid, right? They send the money to the bank. The employee goes to the bank and gets the money. How come the employer can't send the money directly to the employee? That's the question. So thanks so much for listening into today's episode. If you haven't yet, please be sure to leave me an honest rating and review. You can actually do it within the podcast app. We're going to be fine tuning, and we're going to be cleaning up some things up on the show. So don't worry. It'll be some more structure coming down the line. I'm just trying to figure things out, and as I'm sharing this information, I'm still learning a whole lot in the cryptocurrency space. But thanks so much for tuning in, and until next episode, bye for now.